Let's keep it going with the US economy, and inflation in the United States has accelerated to its fastest pace in 3 years. This raises fresh concerns over the strength of the economy and the outlook for interest rates. The Federal Reserve's preferred inflation gauge rose 3.8% in April from a year earlier, up from 3.5% in March. On a monthly basis, prices increased 0.4%, and the latest surge has largely been driven by higher energy costs following the Iran war, which has disrupted shipping and pushed oil and gasoline prices sharply higher. US gasoline prices rose more than 12% in April alone and are now over 50% higher since the conflict began in February. Rising inflation is now starting to weigh on consumer finances and economic growth. Inflation-adjusted disposable income fell 0.5% in April, marking the third straight monthly decline, while the personal savings rate dropped to 2.6%. That's the lowest level since June 2022. Americans are increasingly relying on savings to maintain spending levels as wages fail to keep pace with rising costs. Higher spending on fuel, food, housing, and utilities accounted for much of the increase. The inflation surge is also reshaping expectations for US monetary policy and politics. Financial markets now expect the Federal Reserve to keep interest rates elevated well into the next year, with some policymakers even opening the door to further rate hikes. The renewed inflation pressure presents a challenge for President Donald Trump, who had pledged to lower costs for consumers during his election campaign. Recent polls show declining public approval over the handling of the economy. While strong AI-related investment and rich consumer activity continue to support parts of the economy, economists say the combination of high inflation, slowing growth, and geopolitical uncertainty is increasing the risk of prolonged economic strain in the United States.